Hugh, what do we know at this point? That's a big number if they were to actually hit it.
It's a meaty number, David, and I think it shows a couple things. And so let's just start with the basics here. They're talking about doing this in January. And as you know, covering the industry for as long as you have, David, they like to cut people before bonuses are paid out. And the thinking behind that is you're really preserving the bonus pool for the remaining employees, the people you favor and that you want to make feel good about their work for the past year. The other thing to keep in mind in the timing is, they're actually having another investor day in mid to late February. So this is where they go out and try their executives out for shareholders and say, these are the key performance metrics we are going to hit. This is why we merit a higher valuation than we currently enjoy. And so I think they want to look lean, ahead of this February investor conference, and they're going to do it. And I think the optics of it, not great, because they had a layoff round in September, and to do another one in January so quickly shows that either that they should have had a bigger round to begin with, or that the outlook for 23 has deteriorated.
Right. Now, to be fair, they hired a lot of people over, let's call it, the last 12 to 18 months. They've been building that consumer business. Hugh, any idea exactly where these cuts, to the extent they occur, would fall?
Yeah, so my understanding is that they're broad-based. There's not really going to be a corner of the bank that is untouched, but that, if you're an underperformer, you're considered an underperformer, you're more likely to be, affected by this. And on top of that, if you're in a business which is being retrenched, obviously they're de-emphasizing consumer. And so if you're in a business where you're, in Marcus loans, or you worked on the checking product that is now being essentially shelved, obviously, there's a much higher chance that you're going to be cut in this round.
Yeah. And you, what about the industry more broadly? I mean, I know Morgan Stanley is making some targeted cuts. What are you hearing out there? Is Goldman going to be first to this, or is this sort of going on quietly at a number of its competitors?
I think there's a story there that says that Goldman is cutting more aggressively and deeper because they had this adventure in consumer banking in which they candidly are slightly embarrassed by now because they're retrenching and admitting defeat to a certain extent. So there is that sort of specific story with Goldman. However, they tend to be trendsetters, and I wouldn't be shocked if there weren't rolling layoffs sometime in 23 for the other firms, as they realize that these huge drops in investment banking and capital markets activity, they don't bounce back as hoped for, and that 23 isn't as good a year as 20 or 21 was.
Hugh, thanks for the reporting. Appreciate it.